Good morning. Happy Monday, August 12th. My birthday was good. Thank you for all the birthday wishes. I did hit IHOP. I did not know Starbucks venti hot chocolate, which I used to drink every day when I lived in California, has 80 grams of added sugar. No wonder I felt sick by Saturday afternoon on my birthday. I had French toast at IHOP covered with the fake maple syrup, which I absolutely love. And then I went to Starbucks for the free the free venti hot chocolate. And I got to tell you, Starbucks might actually be an investment. It may be one of those that I want to get into. And the reason is, so I pull into the Starbucks, and the drive-through line is just incredibly long. It's got to be 15, 20, 30 cars. I pull into a parking spot because it was fairly empty. There doesn't seem to be a lot of people in the store. Pulled up my app, ordered the venti hot chocolate, got out of my car, walked into Starbucks. They said, Gary, venti hot chocolate, walked out. I was in and out in 30 seconds. Now, that does mean that they put me ahead of those people in the drive-thru. Doesn't mean that they filled my order quicker. Just means that they put me ahead of those people in the drive-thru. They probably had one barista at the store. This is an interesting one. And if you didn't know, yeah, there's some additional active investment groups that are getting into this that think it's undervalued. Listen, the reality of Starbucks is it's a service platform, and there's not enough people hanging in there. They want to replace the baristas with robots. They want people in and out. It's turned into a transactional business instead of a relationship business. I think they need to run it like Chick-fil-A. That's just my take on it. I mean, Chick-fil-A is a relationship business. When you get to the drive-thru, you get a person there with an iPad greeting you. You don't have an order window, or if you want to order through the app, you can go and pick it up nice and easily. So I think they have some, but because of my birthday, that one might become one that is interesting. Now, let's talk about the Qs. Over the weekend, I wrote the newsletter, Managing My Portfolio During Volatile Times. It's free. The dailystockpick.substack.com email. During the week, it's free. During the weekend, I go into much more depth, and this one was a long one. This was a super, super long one. I sold out of a lot of positions, smaller ones, some losses, some gains, but I sold out of a lot. What I give you in that newsletter is 100% charts, fundamentals, my thoughts, why I did it. Let me be clear. I do not do that so you can follow me into or out of trades. I do that to give you my thought process, because my system is a very simple system. I am a dumbass douche on the internet. And honestly, I seem to have some type of Rain Man ability with stocks. So what I do is I give you my thought process. These are thoughts that you should manage with your portfolio. We are all different in our risk tolerance. So there is no way you should be following me, but I do that in order to give you an idea. One of the biggest ideas that I give you are on the charts. The charts don't lie. There's no emotions in a chart. So you can see we've gone down to 15% in 28 days. 28 days it took us to go down 15% there. Now, you do see we've got a little rebound. Is that something that why did I sell on Friday when we see a rebound? A lot of different reasons. But, the Qs, we talked about it on Friday. That we had under 450. We had a buy-in here at 446 on the algorithm on Friday. I went over that on Friday. Here in pre-market, we're at 451. Is that something you want to trust? I don't know. I mean, make your own mind about it. Again, in the newsletter, I go over all my thoughts, all the reasons. I go over everything. Now, there's a couple of things that I want to point out, and these are bullish. So the last two times the Qs, QQQ, daily RSI, hit oversold, we were at new all-time highs within a month. Will it be that easy? Again, August 9th on Friday, they hit, August 5th at those lows. That was Monday. They hit our oversold territory. Within a month, we're at all-time highs. Now, add to that another tweet from Trendspider. And they said, friendly reminder that the S&P has a perfect record in the month of August during election years. So if that's the case, you guys know SPY is one that tracks the S&P. The one I tell you to buy, which is buy and hold. SPY is great for options or short-term plays or things like that. VOO is the one that I think you should buy. It's got less expense ratio. It's marginal. Whichever one you want is the one you want to buy. You choose your own. But again, you can look at this one. Where did we start August? Okay, August 1st at 9:30. We opened up at 507. Right now you're trading at 491. If that's the case, that you think in this election year that we will wind up positive, now's the time to buy. I mean, there's no waiting. You got an entry here at 490. You're trading at 491. For me, I usually use these ETFs as entry positions. So I will be buying VOO more than likely today with some of the cash that I raised. I did raise a lot of cash. So let's go over a couple of reasons why I raised cash, okay? Evercore ISI expresses concerns around an uninverted 2-10s yield curve. And I want to read you this quote that's from here, because the 2 and 10s, it's bonds. The 2-year should be lower than the 10-year, or the twos are at 4.08, the 10s are at 3.96. It should be in reverse. The 10-year should be higher than the 2-year. Okay, you shouldn't be getting a huge amount of percentage for short term. So I read this weekend, as rates come down and these uninvert, the 2 years might be a much more attractive position for you. But let me read you this. While there is no bell or whistle that rings at the top the last 2 times that this inversion occurred, the S&P fell 43% and 53% over the subsequent 12 to 24 months when it uninverts. This is not a timing tool, but it's still not bullish. That's what Evercore says. Back on Monday, the 2s and 10s yield briefly uninverted back to normalization for the first time in over 2 years. But Wall Street is still waiting for the first day for the curve to actually close at an uninverted level. That's it. If the 2s and 10s uninvert, the last 2 times this has happened, within 12 to 24 months, we were down 43 and 53%. There should be some fear in there in you. Shouldn't be like 80% fear because of this. Should be like 10% fear in my mind. Because again, the consumer is very strong. We've talked about risks in this. I'm concerned about some things. Now, this is great. This is a fantastic clip. And I'll include it in the newsletter. So when you get the newsletter, you can play this clip. It is a fantastic clip from the my other favorite podcast, which is The Compound with Josh Brown. And it's a great clip. They talk about Japan. What's interesting about this one, the theory of Japan actually raising rates a couple of weeks ago, is that the market hit an all-time high. It took 40 years for the market to get back to an all-time high. And what these guys are saying is there's no, the timing of it was perfectly aligned. So I think it's a great clip. It's actually very funny. I think it's good. Now, I did raise more cash. I sold Morgan Stanley, XLY, Uber, AMD, Target, Shopify, GCT. I sold out of a lot. If you want to read why, again, it's in the newsletter. I'm not going to go into the details why here, but I did sell out a lot. Are you going to see those trades on Savvy Trader? If you're subscribed to the trading portfolio, absolutely. If you're not, then just, kind of listen to me and you'll hear kind of what I say. If you want me to look at a stock, just text me or send me some type of message. Reply to the email that you get on the newsletter. I read all that stuff. One of the things that you want to take a look at, the VIX. The VIX closed Friday at 20.41. 20.41, down 14% on Friday, and that one-day drop. Look at this. If we go over a 5-day of this one, look at how it hits 60. We don't even see 60 on that one. Let's go to 1 month. But you're seeing it. It's normalizing again. That's August 5th where it hit 60. It hit 60, and we're normalizing again. If we get under 20, clear signal to buy. Clear signal to buy. Now, one that I did sell on Friday, that just got what I do with Seeking Alpha Premium. When you get Seeking Alpha Premium, you import your portfolio, and it gives you a daily email One that went from a strong a buy to a hold is Uber. And Uber's been in a great run. I'll give you a preview of what I said in the newsletter. The reason I sold Uber is not because I don't believe in Uber. I think that between 61 and 82 is the range. But you're coming up on the 200-day. And it goes to a hold in the quant. That to me is, let's go Uber here. Let's go and look at Uber in the quant rating system. It's the valuation. And the valuation's still very, very high. It's ranked number 3 in the passenger ground transportation. We can look at the other one. MRT and Grab Holdings are the other ones. But Uber, for me, it's a hold. I am going to buy back into this name. I took profits. That was the simple thing. I took profits. I think my average purchase price was like $38, and we're at $68. Now, I still hold it through some ETFs, but I sold out of it. And that's the reason. Look at this. The algorithm didn't get me out. The algorithm got you back in at 65.56. We're trading at 68.61. I just don't like that 200-day right there. I think this is a range. I needed to take some profits. Because I was selling and I was tax loss harvesting, I was looking to try and take some profits at the same time. Because again, I'm slightly nervous about the markets. I wanted to take some profits. This one, it's setting up nicely on the weekly. You know, you have a 24% candle last week. If you don't expect this week to be some type of inside week where maybe you could get it down, 64, 63, somewhere in that neighborhood, if we start to see the consumer weakening. And so that was one of my reasons for that. By the way, Josh Brown put it brilliantly on Friday on his newsletter that I read. He said it's the dumbest crash ever. And this might support this. 73% of the S&P names beat earnings per share last week. You know, everybody's warning about the weak consumer, but they're beating on earnings. And it's definitely a stock picker's market. Definitely a stock picker's market. We're earnings week ahead. We've got Walmart. We got Home Depot. We got Alibaba, Cisco, and more. This is a great article. This outlines everything that you want to know about earnings this week. Home Depot reports tomorrow. So you've got a lot of earnings that are coming in this week. And one of the things that I wanted to do was, hey, let's look at some opportunities. So I built a free screener for you. A free screener in FinViz. Everybody has access to FinViz. This link is in the newsletter. It's going to be free. And it's very simple, super simple. You should be using screeners if you want to find opportunities. And so, this screener, it's the best free screener out there. Market cap, 200 billion or more. Because I like mega caps. Now, let me look at ones that are trading below the 50-day. Because the 50-day, if on some of the growth stocks, the 50-day is used as a very pivotal moment. And let me look at ones that are above the 200-day. If I put below the 200-day and below the 50-day, I think you're getting bearish. These opportunities, we can look at AVGO. Now, we're going to look at it in the 4-hour algorithm, not on the daily. Remember, that screener is on the daily. And on the 4-hour, you'll see it's below the 50-day, and it's just got a buy on Friday at 144. MACD low. We just had 10-for-1 stock split. Their earnings are coming up in September. They had theirs back in June. Nvidia is going to be right before this one. If Nvidia blows it out of the water, you're going to have an opportunity in that one. Let's see. Number 2, Bank of America. This is in the core portfolio. This is a great consumer banking stock, one of the megas. Now it's broken down. Buy in today, 38.29. You're below your 50-day here on the 4-hour. You're below your 200-day. On the daily, if we go to the daily, you're above your 200-day, but you're below your 50-day. That's the difference in charts. You want to take a look at your time frame. 4-hour algorithm gets you back in at 38.29. Why do you want to listen to the 4-hour algorithm? Well, over 2 years, tested 26 positions. So over 24 months, just a little bit over 1 trade per month, 42.6%. What do you get if you buy and hold this one? 14.2. That's why you want to listen to the algorithm. Again, we're trading at 38 Let's see, live here, 38.43. Got you in at 38.29. You got a nice little gap up here to $39. MACD, super low. You know, again, finding opportunities. And say you don't have the algorithm, the 4-hour algorithm. Well, I don't know why not. Go over to, there's a visual down below. It is Linktree, linktr.ee/daily stock pick. It takes you here. The top link is Trendspider. Okay. If you want my 4-hour algorithm, use that link. Go over to Trendspider. It's $53 a month. And then what you do is you go back, once you sign up, you go back to the Linktree, take a screenshot of your account, and go over to the email. And just email me a screenshot of your account. I will send you the 4-hour algorithm and 65-minute algorithm, the 5-minute entry, which I love if you want to day trade. I will send you all of the custom watch lists. I will send you everything that you need to get started in Trendspider. I will send you. It's absolutely, the 4-hour is my best tool that I use to trade stocks, to get in and out. I love it because charts don't lie. I'm bringing this to you again. Charts don't lie. They give you exactly the price that you want to pay. And so the algorithm, if you don't want to pay $38 for Bank of America, you don't have to pay $38. You may think it's going down to $36. This algorithm tells you, hey, your 9 days starting to move positive. Your 50 days still moving negative. A little bit concerning. But when you look at the weekly on this one, nice little pullback here. Using the 200-day at 35 as its support level. 50 days moving positive. You could have a golden cross here. So again, using this stock screener in FinViz, it allows you to find opportunities like that. You got Google, you got Microsoft, Netflix, Nvidia, Novo Nordisk, Oracle, Taiwan Semi, Walmart. Walmart reports earnings this week. We just went over that one. Walmart is on this list where it's trading below its 50, but above its 200-day. You go and you look at the 4-hour algorithm, it's below its 50, starting to turn around a little. Algorithm got you in at $63 there. Why didn't you buy at 63? Oh, you wait until 67? Walmart I like. Walmart I really, really like. This is one that I've held in my portfolio for years. I like this one. So again, the stock screener in FinViz, it gives you opportunities. Use your own free charting program. Just make sure you have charts. When you're using FinViz, make sure you have a charting program and a system in place that you can trade, because when you find opportunities, you want to take advantage of it. And that's just the way. Now, I wanted to highlight this. The real estate sector. This is crazy, okay? 1 month. Technology is down. This is XLK. And if you have Seeking Alpha, then you can look at all these things. And here's the spider sectors that align to it, okay? XLK, down 12%. That's the technology sector. Healthcare is up 3%. Consumer discretionary, which includes Tesla and Amazon, that's down 8% in 1 month. That's XLY. I trimmed my XLY. In fact, I sold out of it in my retirement account. I'm looking to get more into tech because I think that 12% drop is an overreaction. But what I want to point out, our utilities in 1 month are up 6%. That's XLU. Real estate, which has been left for dead, which is one of the worst performing year to date. Over 1 year, it's up 11%. Okay? It's up 8% over 1 month. 8%. Now you're close to your 52-week high on that one. XLRE has just been a nightmare of a stock. This is filled with REITs. I'm not a huge REIT guy. And then all of a sudden you get this huge run up. The algorithm had you in at 38.27 and it got you in July 3rd. Again, 1 month. Did the algorithm know something? Absolutely it knew, because it's built on moving averages. It's built on MACD. It's built on indicators. That's how this algorithm works. Now, are you seeing a turnaround? Yeah. You look at the 200-day on this one. It's at $40. You're trading at $41. Real estate might be coming around and turning around. Again, this is how you do it. This week, what are we getting? We're getting a lot of data this week. We're getting the CPI and PPI. Those are inflation. Those are inflation numbers. Now, when you look at hard hats or party hats, Walmart earnings could shake up the retail sector. Again, this article goes over this. There's two heavy retailers in the core portfolio. It's Costco and Walmart. Costco's super expensive. It's interesting. Walmart I own, but I won't both. I don't own Costco. I sold out of Costco, which probably was a mistake because it's come roaring back. I just thought that the valuation was crazy. I did sell out in the 840s. I expect if the depending on where Walmart goes, Costco might go the same way. If Walmart starts to go down, Costco may go up. You never know. Again, for me, for this one, I'll wait until the algorithm gets me back in. I wasn't sure of this 831. We're in a seasonally weak period because, again, if you get Trendspider, you get this nice seasonal period that you can look at. We're going to take this back, not to 2019. We're going to go all the way back. Let's go back to 2000, okay? August is a weak month. But then you get into these crazy good months for Costco. This is 25 years of data. And your mean change in September, 1%. Your mean change in October, 3%. Your mean change in November, 3%. So Costco may actually be a buy just based on seasonality. Again, do you want to buy it? When you look at this weekly, it has been flying and we've seen a nice little pullback. So again, opportunities are out there. They are out there even in the down markets. Wells Fargo, investors need to be selective. Okay? Selective. They highlight Meta, Google, and Netflix. Selective includes Palantir. It's an AI market. This one on Friday got that news that it's teamed up with Microsoft. It went over 30. I've told you to try and trade this between 25 and 30. You didn't want to get out. You wanted to get out as you climb to 30. Maybe you got out at 28. Are you upset? No, you'll have another chance to buy it at 28. You will. Patience. And Wells Fargo here points out, be selective, but they highlight Meta, Google, and Netflix. I agree with all of those. All of those are in the core portfolio. Now, Goldman Sachs screens for post-sell-off stocks with healthy fundamentals at a discount. This is a list of what? Let's say there's 45 names on here. 45. Number one, Wolf. Return since July, 25%. Minus 25%. Again, these are sell-offs. So these might be opportunities for you. Toast is down 11%. Again, you want to take a look at this article because if we are turning around, you want to make sure that you have some opportunity. That's a great article. Microsoft, we can go over Microsoft because it is one of the few undervalued tech investments. This article is a really good article about Microsoft, how they feel like it's undervalued. I don't think it's undervalued. I mean, let's be honest. I think the Wall Street price target on this one is aggressive at 500. You're trading at 406. I would say anything under 420, they've had their earnings, so you know exactly what they're earning. But anything under 420, I think is a good long-term buy. We are still in an AI market, and Microsoft is one of the leaders taking advantage of this because they have the cloud business. They have OpenAI. They have Copilot. They are one of the leaders taking advantage of this. And that price target, when we look at that price target, it's chased it, okay? The last time we had this pullback, did the price target come down? No. The price actually went right back up. The last time we had a significant pullback in 2022, the price target chased it down, but you're not seeing price targets come down on this one. Now, the valuation is stretched. No mistake about it. 34 PE, that's very, very high. PEG ratio above 2 for the forward, that's super, super high. But a company that's growing revenue 15% year over year, that is this large, that is unbelievable. That is unbelievable. So, yeah, you want to look at Microsoft. It's an opportunity. In my mind, again, we can look at this one. Does it have a buy in the algorithm? Let's see if it has a buy in the algorithm yet. Yeah, 404. You're trading at 406. The 50 days moving down. You want to be patient. I would say this range between 402 and 430. I think you're fine buying it there. Now, do you want to buy it for the long term or short term? I think you're fine buying it long term. But again, you want to make sure that you have it. Now, Perplexity. Perplexity is an AI platform. They're going for Google search. Google search owns 91% of the search market. We talked about being selective. I think Google at 165, decent. I don't think it's a horrible price for this business. What you're under your 200-day, your 50 days moving down. Same thing as Microsoft. When you look at the weekly on these and you go and you look at the weekly, it's still a bit high. But for long term, this is fine. I think they will win some of the AI market. And what this is pointing out is Google's bread and butter, which is search, is in the crosshairs of AI. And we know OpenAI just started their search platform. It's still, the large majority of people will still use Google. I mean, go and ask your grandparents or your parents what they're using for search. They're not using OpenAI. Very, very few people are using OpenAI. So the money's still in Google. And if Google can turn, we talked about, I went out to a sushi restaurant on Saturday and I didn't know the wait time. I used that Google Assistant again to call. And while I was on the way, it made a reservation. It called and got it. It was perfectly fine. We got there and we got a seat right away. It was fantastic. So again, be selective. Understand the 4-hour algorithm. Know where you are on the charts. But be selective. I think this is an opportunity. Dell versus Supermicro. Supermicro got a huge pullback. Now, Dell is coming up with their earnings. We can look at Dell on the Supermicro. Let's see where they are today. They're at 512, up almost 1%. I would argue you're probably going to see a nice little pop in this one. I did sell some of my Supermicro. I am not out of it. They got dinged on their margins. They put fantastic earnings growth forward. They said, hey, we're going to grow. And the market said, you know what? We don't like the margins. That's the only thing the market went off on was the margins. And they don't know if SMCI can bring up the margins. Well, Dell got dinged on the margins the quarter before. Their earnings are coming up later in August. Let's see. It is August 29th, right after, I guess, NVIDIA. And you've got this death cross of the 50-day on this 4-hour. You got to buy today at $92.50. You're trading at $96. Do you want to buy there? Well, let's take a look at the weekly because this one had a huge run up. Where have we settled in? On the weekly, the RSI is at 38. Your MACD's kind of come down, but your strike line, that yellow line up there, still a little high. It doesn't feel comfortable. But when you look at it from January 1st, the value area, the VWAP from January 1st is at 124. Okay, your volume weighted average price is at 124. And then you take a look at it over here. It's a strong buy in the quant. The valuation is not extended. Wall Street seems to think that this one is worth $160. That's a 71% upside. Now, mind you, if they've if the PC cycle hasn't come around and they're not selling PCs, they're going to sell more servers. And that's going to bring their margins down. When you look at profitability, the 23% profit margin, if they sell more servers, which are in the 10 to 15% gross profit margin, they're going to come down. What Dell has that SMCI doesn't have is they actually have the software on that side. So they'll sell ancillary devices to the people too. They're doing, Tesla stuff. So I think Dell's a great buy here. And we just so happen to have a buy today on the 4-hour algorithm, at $93. I'm going to add to my position there. I like this one. I'm not watering my weeds. In my mind, I'm not watering my weeds. This is a great stock. This is a well-run company run by Michael Dell. Now, that death cross does worry me. It does worry me on the weekly. But when you see the value-weighted average price all the way from January 1st, well above where it is today, in my mind, that's an opportunity. Again, you've got to understand your charts. You've got to understand these things. SoundHound. Talked about this one. This was one that came out with earnings. They purchased it. AI upgrade following the transformative acquisition from Cantor Fitzgerald. They raised their price target to $5 from $3. I think it was. Let me see. Let me go back to the article because I didn't write that down. They raised, $7 from $5. They're trading at $4.87. Now, this one, they are not making money. Understand, this is a technology company that does have some AI into, I think it's Chrysler or one of those Daimler Chrysler, I think is one. It's trading right now at $4.91. Algorithm got you in at $5.07. This one makes you 461% over 24 months in this algorithm. You do want to listen to it. But I would argue you want to listen to it when it's in a confirmation stage. Right now, I don't know that you have a confirmation stage in this one because your MACD not giving you any huge signs. Your RSI still up above 50. It's at 51. So I would wait on this one, but it's interesting. This one is one. The valuation is a little nuts. It's a little nuts because they're not making money. It's the profitability. Now, gross profit margin, you can see their growth. They're growing 53% year over year. The valuation is a B, and it's because they don't have a PE. They don't have a PE. So that's the problem is they're not making money right now. So you want to be careful with this one, but I do think that one's one to keep an eye on. Now, Qualcomm in spotlight on the back of Wolf Research downgraded them, and they downgraded them because of Apple's business, because they fear that Apple is going to make their own chips and cut Qualcomm out, and that's a huge portion of Qualcomm's business. And they just signed like a 5-year contract or a 10-year contract a couple of years ago. But down the line, they feel like that Qualcomm is capped because Apple is working so hard to get their own chips in their phones. That's it. I mean, that's essentially it. You want to have that on your radar. Now, I own Apple. I own a large amount of Apple. I'm not saying that Apple is a great one. But when you look over 6 days, over 3 days, when Warren Buffett sold it on Monday, you made 7% last week. After, when Warren Buffett sold, the reaction, any reaction in the market is an overreaction. And so I would argue Apple, still a great buy at 216, gets you in today. 216.54. What does the algorithm make you? It makes you 23%. You do make 30% by buying and holding, but we all have different risk tolerances. If Apple is one that you don't want to buy into, but you want to use the algorithm, maybe that's the choice that you make. Because you get 23% instead of 30%. Your average win, 10%. You can see it just got you out with a 32% gain. Again, during this whole time. You had some pullbacks during this, but the algorithm kept you in. So again, if you want to take advantage of the algorithm, sign up for Trendspider. Now, let's look at Bitcoin. Bitcoin is under 60,000 again. Keep calm and buy Bitcoin. This is a podcast from Seeking Alpha with a crypto expert. I think it's interesting. I think Bitcoin is one that I've gotten into with iBit. We have a social request about which ETF I prefer. But Bitcoin's at 59,520. Now, when you look at it year to date, you're up 34% year to date. Over 1 year, 102%. Over 5 years, you're up 422%. 6 months, you're up 19%. Now, as you get closer to, over 1 day, it's down 5%. 5 days, you're up 4.83. 1 month, you're up 4.41. Could this one come back to, 10,000? It could. But this Bitcoin correction is over. Next major rally beginning now. Technical analysis. I don't do technical analysis on Bitcoin, but I do read about it. I like this. I like this a lot. So let's talk about some social requests. Jacob from Facebook wants me to look at Citigroup. Now, I have always said Citigroup, in my mind, is the best opportunity for a bank. We had this huge sell-off last week. Now, the algorithm got you out, the candle before on Friday, it got you out before this enormous drop-off where you went from 63 down to 50. Let's see, it went down to 53. You're at 57 right now. Is this a buy? Algorithm probably will get you in today. Let's take a look at FinViz, because Citigroup here, you can see the book value, $99. Okay, year to date, you're up 12%. Average price target, $71.79. So you're buying at 57 when the target price is $71.79. Let's see the most recent April. They went to $60. That was Evercore. In March, Wells Fargo went to $80 from $70. Okay, that was in March. If we look at insider transactions, October of 2023, nobody's buying, nobody's selling it. So it's a boring bank. Do you want to get into it? I would argue yes. I would argue that book value makes it an attractive bank. The problem you have is it is still in a turnaround stage, and that profitability is an issue. The credit card thing, I think it's credit cards that are weighing on this. Cash from operations are losing $16 billion. $16 billion. Now, when you look at the revisions, 6 up, 11 down on earnings per share, 7 up, 9 down earnings per share. And this is all the quant. The valuation, it's not crazy. The valuation, it's PE of 10. The sector has an average of 11. PE forward, 9. Sector has an average of 11. The PEG, 38.38. That's 68% against the sector. Now, it's ranked number 52 out of 68. Let's first go and look at Wall Street. We said the price target was 72. It's 24% upside. Now it doesn't look like it's chasing it. It does look like it's pulled back. Every time it's pulled back, we have seen some come back, but we haven't seen a huge amount of people pulling this one back. Now it's 52 of 68. KB Financial is the number one. When you look at KB Financial, where are they? We can go and look at KB. Let's look at it in FinViz. Let's see what the book value of KB is. Book value of KB, 100. You're trading at 60. So this one might be a better opportunity for you. But it's A's across the board. It's ranked number one. It's a diversified bank. Mind you, this is $22 billion. Citigroup is significantly larger. So, but again, Wall Street has it as buy. KB Financial, this is I think this is a regional bank. Let me see. A range of banking to consumers in South Korea. The United States, the company operates through retail banking. Yeah. It's a good bank. It's a good bank from what I know. I don't know too much about it, but the stock chart, we're going to go look at KB. Let's see. Let's look at KB in the algorithm. Again, I'm using all of the tools that I have to my advantage. KB Financial algorithm got you out, probably get you back in today. You're seeing, they have already had their earnings. We can go and look at a weekly on this one, weekly chart. It's in a big upturn, and then it got this downturn down here at 55. You're trading at 60. So MACD is a little bit high for me. RSI is a little high. But Citigroup, I would say, if you want, Citigroup was my pick as far as the favorites for this year. Mid-year, I said banks, I think in the second half were going to be good. And I believe I picked Citigroup as my biggest, my one. I don't personally own it. Full disclosure, I don't personally own it. I don't own a lot of banks. I own Bank of America. I owned Morgan Stanley, but I sold out of that one. But this one, Jacob, I think it's a good one. I like this one. Carl from Instagram, I think, my Instagram. It's really inspiring to think about you being able to retire at 48. I have a dream of being able to do that myself. I like my job, but it would be nice to be able to own your own time. Whatever you want. I would be nice to hear your take on ARM. Last months haven't been so nice, but I think it will be an important company in the future. You probably remember that NVIDIA wanted to buy them, but they weren't allowed. So let's look at ARM. Here's what I know about ARM. It was a recent IPO, and by recent, I mean kind of in the last couple of years. And it started out great. I mean, this one shot up on their first earnings. That's their first earnings. This was their first earnings ever in February of this year. It went from 70 all the way up to, 164 at its high. 164 at its high. Again, I say 164. That's within a few days. So that was hype. But ARM is one that is really, really good from a standpoint of, yes, everybody uses them. Everybody pays their license fee. Everybody does this. But ARM is incredibly overvalued. When you look at the valuation of this, okay, it's not covered by the quant. The PE is 82. The PEG ratio, even the forward at 2.4, is very, very big. When you look at revenue growth, they're growing 31%. Now, when you look at the profitability, they're making 95% gross margin. That's what they are, a software company. And so when you look at this and their price target is 135, it's 14% upside. I would say that Wall Street is chasing this because look, it's continuing to go up. Wall Street is chasing this. It's finding its legs. You don't even have a year in this stock yet. The algorithm makes you 192%. I would look at that 118 as a pretty good buy. Look at that MACD. When you look at the weekly, again, you only have a few candles here. So it hasn't created all of that. Your VWAP is about 125. So you're looking at a fairly good value. But again, when you look at the valuation, the actual PE of this one, it is incredibly high. So, Carl, I would say yes, you're right that everybody uses them. Yes, NVIDIA wanted to buy them for significantly less than what they're actually worth right now from a market cap standpoint. And yes, they are needed. So the only thing that I would say is the valuation. So, Joe from Instagram, question about holding cannabis stocks that are sitting on losses. He thinks they will come back. Here's my thing, Joe. I think it's MJ is the, this is the Alternative Harvest ETF. And this is basically all the pot companies. If we go over here and we look, MJ, I think it's probably Tilray and a bunch here. Alternative Harvest. Amplify is the number one. Tilray. Amplify Alternative U.S. Harvest. Yeah. But Tilray is in there. Innovative Industries, Canopy Group, SNDL, Sandile, all of those. So here's my thoughts on marijuana. If you've got losses, take your losses. Because I don't think that this one comes roaring back. For me, I do edibles. I do edibles when I go to like Las Vegas or Colorado. I'll walk into the dispensary to get edibles. I was in Columbus, Ohio, and their dispensary business opened up that week. Didn't have time to go to the dispensary, but I would go to the dispensary. I don't like smoking, don't like the health effects of smoking, but I will do edibles. The problem is anybody that's local does not go and do edibles from a dispensary. They're getting them from the local dealer, and they're getting them from friends, and they're doing that. Until the law starts cracking down on the illegal trade, that's where it's going to make money. It's not going to make money in the alternative harvest. Tilray is not going to make money until they get into drinks. And that is still a very, very long way away. So I would say if you've got losses, Joe, take the losses. I don't like this sector. I just don't. It's been false promises. And the problem is it's tax-based. And so when you get these huge taxes, it makes the illegal trade and the locals save about 50% when you just go to a local instead of the dispensary. And so these companies don't make money. And that's the problem that you have. One other thing that Joe asked about was he asked about managing a portfolio and gave me a bunch of ETFs. I told him I'm not a financial advisor. I can't give you financial advice. This is purely entertainment. But what I can do is point you in the direction of people. And so Humphrey Yang is on YouTube. I will include this particular, I watched this one. And he hired 3 financial advisors off of Fiverr at different price points. I think one guy charged like $500. Another person charged like $200. Another person charged like $40. And he rated them as far as what they come in at. This is financial advice 101. This is, hey, here's my portfolio. I want you to rate it. And there's plenty of people who will rate your portfolio. And they may be financial advisors. They might not be. But again, this was just 101, what you want to look at. Now, Humphrey, his risk tolerance, significantly less than mine. I do not align with Humphrey. So most financial advisors, I don't align with. So that would just be something that I've got to deal with. But I think this video in particular for Joe, I think this one's really, really good. So now let's, John from Spotify. If you didn't know, you can add comments on Spotify and I reply to them. Love listening to the show every day. What do you think about Norwegian NCLH for a short-term trade? I would trade. So for long-term, Royal Caribbean is an alpha pick. And if you didn't know about alpha picks, it's the third link here on Linktree. Alpha Picks is a portfolio that kills it, 114% versus the S&P at 38%. You get 2 picks, one on the 1st, one on the 15th of each month. They tell you when to sell. So it's a managed portfolio in that sense. You can use it for ideas because it's, several of their picks I'd never even heard about. Bluebird, we brought that one up. Bluebird, yellow school buses. I had never heard of it. Sprouts Market, I shopped there. But I never thought that the stock was exploding like it is. But again, these are 1st and 15th. You get picks. You use my coupon, you save $50 off of that. So one of their picks is Royal Caribbean. And I think it was earlier this year, Royal Caribbean. So, and we can chart Royal Caribbean versus NTLH. You know what? Let's do that. Let's go over to Seeking Alpha. You know what? I'm going to just open up this one. We're going to go and look at NCLH right here. And we're going to take a look. And in the quant system, it is a buy. It's B's across the board except for revisions, which is up. Somebody hasn't told these cruise lines, by the way, that the consumer's weak because the cruise lines are sold out. Royal Caribbean sold out. Virgin America sold out. It's sold out. So when you look at this, the valuation, not nuts. I mean, their PE, they're not making money. They're still hurting on money. But once they start making money, you'll see it's going to be good. Now, price to book, it's $9. Okay, so you're overpaying for the actual stock, but their ships are new. They took out a whole bunch of debt around there. Their growth, they're growing 26%. Operating free cash flow, forward, 112%. Profitability, they got a C, 37%. But return on common equity, 118%. Let's take a look at Royal Caribbean, RCL. Okay, because that's the one that I want you to look at. RCL over 1 year, 50%. Norwegian down 12%. Year to date, we can kind of shrink this in, 21% gain for RCL, 22% loss for NCLH. 6 months, kind of bringing it in. NCLH, kind of even, down 7%, but Royal Caribbean still holding up at 33%. 1 month, oh, come on and work. Let me redo this. Refresh. Computer's a little slow. There we go. 5 days, Royal Caribbean, 1%. Norwegian loses 2%. So everywhere you're looking, it's just losses, okay? That's the problem with Norwegian, is it's been a weak stock. Now, would I buy at this 1573 level? For a short term, I don't know. I mean, again, I don't want a falling knife. So when I take a look at the weekly, I see that 200 days of falling knife. The 50 days kind of just floundering. We're right in that middle territory, but we've broken down on the downside. Now, the MACD is just kind of hovering, but this trading range scares me, and it's not something that I necessarily want when the consumer's weak. So, John, I would look at this one as probably not. I'd like to invest in Royal Caribbean, to be honest with you. That one's just been flying. This one, again, you can't get a seat on these cruises. So it's crazy. One other thing that John had asked about was, do you have one Bitcoin ETF over another? And no, I just, go and pick whichever one. But whatever you're doing, chart it. And so your BITO, I will choose the one that I chose, which is IBIT. And the only reason I think IBIT has a bigger market cap than BITO. But when you look at IBIT versus it, we can look at, 6 months. These all came out in January, so 6 months should be. BITO is losing. I mean, BITO, by the way, is a Bitcoin strategy ETF. Does it track the spot price of Bitcoin? Let's see. I think it did before, so maybe it changed its strategy or something. You'll want to look into, is an exchange traded fund and launched by private. It invests in derivatives such as futures. It's a futures. So the difference in BITO and IBIT is BITO may do futures. I don't know enough about this one, but if you want to look at it, again, I chose IBIT because I know this one in particular, it does the spot price of Bitcoin. And let's see, BTC versus US dollar. We can do that one. When you look at this one and we do the 6 months, so you can see IBIT is up 27%. Bitcoin is up 17%. BITO is down 19%. So I would say get make sure you understand before you invest in this stuff, you should understand what it's actually betting in. What it's actually doing. BITO is on the futures, not the actual spot price. Now, IBIT is supposed to be the spot price. They've diverged a little bit. And the reason is because IBIT is super, super popular. And so in a market dynamic where you're buying and selling and that's where the price is set, when you're buying and selling IBIT over Bitcoin, there's going to be a little fluctuation there. So you don't want to buy IBIT when it's over the Bitcoin price. There's websites out there that you can look at and you can Google, but that's it. Now, as far as scans go, crazy. Again, Friday, huge move. So we had a huge list, an enormous list. But I'll bring up a couple, which I already brought up. The core portfolio, Google. Core portfolio, Apple. We had a buy-in on Apple. Core portfolio, Amazon. We had a buy-in to 216 on Apple. You're trading at 216. Amazon had a buy. Looks like we got a nice gap from the earnings here up to 181. Maybe we're going to fill that gap with that 166. Again, the MACD is super down. But when you take a look at the weekly, we are still above the oscillator. Now, it hasn't reset fully, but you just had this golden cross. I would say, again, I've read it all this weekend. It's a once-in-a-lifetime opportunity to buy Amazon. I think it's a good one. Their Prime Day, I bought a ton on Prime Day. I held that company up, I think, with the amount that I spent on Prime Day. XLY. I got out of this one in my retirement portfolio. I told you about this one. XLY, buy in at 174. You're trading at 173. Again, my fear is the consumer's weak, that this one, might go down. I could always buy back in. Another cross up, VOO. It looks like the S&P has turned negative here. We're about 15 minutes into the trading. 490, you're trading at 488. Goldman Sachs, which is another bank. This is in the core portfolio. So Goldman Sachs, the buy-in at 491, it's trading at 487. Again, you want to take a look at that. Bank of America, we talked about Bank of America. I think Bank of America is a great bank. I currently hold a small portion of this. You got a little gap up there, 38.29. You're trading at 38.31. You can buy it there. There's a ton in here. One that I pointed out and maybe didn't give it enough look. Dell got a buy-in. Now Dell is, let's see, it's down 0.26, 92.50. You're trading at 92.31. Again, the market's turning a little bit sideways. I think the consumer's weak. I think until tomorrow when we get the producer price index, I'm not taking a chance. I want to buy into VOO. I want to buy into Dell. I've got cash on the sidelines. But my past learnings over the past couple of weeks is I want to be patient. And I want to be patient with this. So if you want all the list, go to the Daily Stock Pick newsletter, dailystockpick.substack.com. Sign up. It'll be free today. I'll include everything that I talked about here in the newsletter. You get links to everything. If you want to see any of the links, again, it's on the link tree. So there's 3 links that I want you to pay attention to specifically. Trendspider. If you want the 4-hour algorithm to protect you not only from the downside, but to give you upside, then you can look at Trendspider, $53 a month. When you use my link, you're saving 50%. You get 6 months for free. That's $642 a year. And you get everything that I use, everything that I showed you on the charts, everything I do in my newsletter. You get to do that on your own. It's a fantastic platform. The second link is Seeking Alpha Premium. And this is where you get the quant rating. This is where you get everything. You save $25 when you use my link. It's a free 7-day trial. So just import your portfolio, get the quant rating on it, and then you can cancel after 7 days if you want, because it's a free 7-day trial. It is a fantastic platform to get all of your fundamental information. There's 2 things in my system. It's the charting, which is technical, and it's the fundamental from Seeking Alpha. Now, say you don't want any of this, or you just want some ideas. Alpha Picks. That's the third link, and you save $50 when you use my link. Again, the portfolio's performance is what you're getting. You get a full description and a full fundamental analysis of every stock on day one. Every stock in that portfolio, even the ones they've sold, you have access to. You get access to all of the returns. Doesn't give you the quant rating of all the stocks. If you want the quant rating of every stock, that's Seeking Alpha Premium. Seeking Alpha, the Alpha Picks is just the portfolio. But those are the links. Now, if you want to support me, sign up for the newsletter. The newsletter is free during the week. You can get it free. If you want to see what I wrote on the weekends, just pay me, support me. I give a free 7-day trial, so you can read the whole damn thing. I have an education section where you can see right down here, education. You can see everything that I do. 5 rules for traders. You can see all of the things that I use on my charts. Confirmation, button hook, cross up, PE, golden cross, divergence. What does that mean? Buy or sell over this price. How do I find the price? When to sell stocks, a collaboration with My Weekly Stocks. Trading using candlesticks. All of that's on there. So if you want that, that's on the link tree as well. We'll just keep going down. Okay, $20 off your phone bill. This is visible. This is the service that I use. It's Verizon. I love it. It's $25 a month. You get $20 off when you use my link. AT&T. I am talking to you on gig service. 1 gig symmetrical. It is the best home internet service I have ever used. And I am a former cable executive who sold cable services. Okay? AT&T blows it away. So check if AT&T Fiber is available for you. You can use that link. And then there's a bunch of other stuff. Savvy Trader, Core Portfolio you can follow. There's my YouTube channel. You can gift me if you want to say happy birthday, Venmo, PayPal, Cash App, whatever you want. All the social links are up above. I will be back tomorrow. Let's hope today winds up a green day. Take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.